How surprised are you, if at all, that Brent crude and our crude here is only up fractionally this year and actually lower year over year?
Oh, I think it's been fascinating this year because not just because of what's been going on in the Straits of Hormuz, but if you look at the physical market has been one of the tightest it's been since 2011. Every crude oil benchmark right now is backwardated, which is in sharp contrast to last year. So the market is tight, but I think what's been worrying the market very much is these macro concerns about the China-US trade war, currency wars, and I think that's been the biggest reason why oil has struggled to rally despite geopolitical risks.
Yeah, the backwardation, a technical term meaning that the price of a future contract is actually lower than it is right now. Is that just a reflection, Amrita, of how much oil is actually out there in the markets?
No, well, backwardation actually means how tight the market is right now because you are essentially asking for more supplies right here, right now. But it's perceived as getting looser in the future. It's now, yes, but down the road, people are concerned it might get looser, no? Well, I think it just depends on how you're interpreting it, but backwardation essentially means that, you want the oil out right now, and therefore the flat price should be higher right now. Of course, just the very shape of the curve also means that you will be continuing to draw down inventories, which is what we are seeing around the world. By definition, then in the future, unless and until demand collapses, the price will be higher than what the forward curve is saying. There is absolutely no incentive to hold inventories right now. We've drawn about 50 million barrels of crude oil inventories in the kind of key areas of US, Japan, and Europe over the last 6 weeks. So the market's actually tight. It's just that the fears of a trade war are basically driving the perception, like you say, that prices will probably come under even more pressure next year if we enter a global recession.
So if we did not have the US-China trade war and these fears of a global recession, of course, if woulda, shoulda, coulda, you know what I mean, but if the U.S. and China made a deal and that was removed from the market, would you then expect prices to, I don't want to say shoot higher, but certainly move higher, Amrita?
Absolutely. I mean, I would expect Brent to be in the $75, $80 range if it wasn't for the trade war. But again, like you say, it still should have, or whether it happens or not. Unfortunately, though, we don't see a comprehensive deal between China and US because they are poles apart when it comes to exactly what both sides want. So this is going to drag on for a while, and this has big implications for European growth, all the Southeast Asian economies as well, because these are all trading partners with China. Question is, if demand stabilizes over here, I think prices can still edge higher because right now market just doesn't know how bad things can get. But if it continues to deteriorate, I think that's where you get more downside to prices.